everyone, I am here to teach you about the third chapter of our economics, that is money and credit. So, money. Money is what? Money is something that we use in our day to day lives, as in our day to day schedule we purchase things, and because of money we can purchase things and we can sell things because it acts as a medium of exchange. Medium of exchange means that if we are purchasing something, so in return we have to give the person something, so it is also a payment for goods and services. Medium of exchange means it acts as a payment for goods and services. And because of this feature, it also adds one feature, that it is a unit of account. Unit of account means we can measure something between that what is much costlier and what is low costlier. We take an example that we have a packet of biscuit and we are purchasing a car. So if we want to know that what is much costlier, so we will compare these two things by money, that what is much costlier, the car will be, because the worth of car is about 9 lakhs and 8 lakhs, and the worth of biscuit is about 10 rupees, so the costlier one will be what? Car. So the worth of car will be more. So unit of account means a common standard to measure something between two items, that what is much costlier and what is low costlier. So money also has the third function, that is a store of value. Store of value means a thing that can be retained over time. Retained over time means the value of money is not going to be changed over time, that in the present the worth of 10 rupees will be same, and in the future also the worth of 10 rupees will be the same. So money acts as a store of value that can be retained over time. So because of this function of store of value of money, there is one more function, that is a standard of deferred payments. So deferred means later. We can say that the standard of later payment we can call it as credit. So later payment, as money is a store of value, the value of money is not going to be changed in the future, so we can say that it allows payments to be made in future also. So now we are going to look upon that what is credit. As we have understood that what is money, now we will understand that what is credit. So credit is something that we are using nowadays. A simple sentence we can give to the definition of credit, that is borrowing of money. As in the childhood days, we can remind that in our childhood days we borrow things from our friends, we borrow some eraser, we borrow some pencil. Now in our youth days we borrow money from anyone. There are many things that we can borrow money from, and we borrow money from banks, we borrow money from our friends, families, and so on. A feature of credit, that is borrowing, it is so convenient. Why it is convenient? Because if we want something now, we can conveniently just borrow money from somewhere. We can borrow the money from banks, and we can borrow the money from our families, friends. So it is so convenient for us to buy anything at the time we want. So because of the conveniency of the credit, it is also very immediate. As we want it now, we can get it now by borrowing money, and we'll pay it later for the thing. As credit is immediate, it also manages your cash flow. Managing your cash flow means that when you don't have the money, you can borrow from someone. And then when you have the money, means when you have the surplus fund, you can return to the person you have borrowed. In this way, it helps us to manage our cash flow at any time. I think we have understood the two terms, that is money and credit. So now let's go ahead, and now we will discuss about that the money and credit that we are discussing is a term of our future generation. Have you ever thought that how were the transactions done in the olden days? So the transactions in the olden days were done by the barter system. Barter system is what? Barter system is a system in which the two people are exchanging the things that they desire to sell and exactly wish to buy. So in this barter system, we exchange the things with another thing. That in this picture we can see a man is giving some fish and the other man is giving some chicken piece to the other person. So they are exchanging the things by the things only. There is no medium that exchanging can be done. So the exchanging is done by the things only. So as we have discussed that in the earlier days, the introduction of money that has not been done. So what is the need of the barter system there? There is so much need of barter system because there was no medium of exchange in the olden days as the money has took place. But in the olden days there were no medium for exchanging the things. So we have to exchange the things only for what we need. So here we can see in this picture that if one person needs the potato and the another wants the shoes, so they can exchange the things while using them. But in the barter system, there is one condition. The condition is that the both the parties, that means the both the people have to agree that what they want to sell and what they want to buy have to be agree on the terms. If we can see here that as money act as a unit of account means a common standard for measuring things, we cannot use some things to measure. Now we can see that the worth of shoes and the worth of potato in terms of money differs. But if we want to compare here in need of barter system, if we compare the two things, shoes and money, we cannot compare them that which is more worthy. So in barter system there is a condition that both the parties have to agree to sell and buy each other commodities. So when a person desires to sell exactly what the other wishes to buy is known as the double coincidence of want. This definition is so important, so I need you to write it down with me only. So I think you have understood that what is the need of barter system, so we should proceed. So now what is the difficulty with the barter system? As we know that money is a medium of exchange and it also acts as a unit of account. But in the barter system, there is no unit of account function is there between the things, as we cannot compare the things that what is more costlier and what is low costlier. So in barter system, the difficulty is that only. So if we want to buy some shoes and the other wants to buy some wheat, and we don't have wheats but we want to buy shoes, so how can we give the shoes and how can we buy the wheat? So in this three pictures we can see that the first one is saying that I'll give you shoes for wheat, but the second one is saying that I want shoes but I don't have wheat. The third one is saying that I don't need shoes but I need clothes. So we can see that here the exchange is becoming impossible. So we can see clearly that in barter system there is so much of difficulty as we have moved forward towards the production of things. A variety of products have been seen in the market, and because of the variety of products we can see that the exchange is becoming impossible. So now let's move forward and we'll see that what is the solution to the difficulty of barter system. So the solution for the barter system is what? Introduction of money. So by the introduction of money, we have seen that money act as a intermediate between the exchange process. So money is also known as the medium of exchange. So we have understood that what is the need of barter system, what is barter system, what are double coincidence of wants, why money act as a medium of exchange. So we are ready to solve some PYQs. So the first question is, what is meant by double coincidence of wants? So it is an essential feature of the barter system, as double coincidence of wants, both the parties have to agree to what to buy and what to sell and for each of their commodities. And the second question is that what is the meaning of barter system? So in earlier times, before the introduction of money, goods and services were exchanged with goods and services. As we have understood in barter system, we exchange the goods with the goods only. So the meaning is the same, that the exchange of things is done with the things only. So in the system of exchange was termed as the barter system. The barter system is having that feature called double coincidence of wants. So don't get confused between the two terms, double coincidence of wants and the barter system. The double coincidence of wants is just a feature of barter system. So how does money act as a medium of exchange? We have understood it in the ongoing class that money acts as an intermediate between the exchange process, and it eliminates the double coincidence of wants. So it is also called a medium of exchange. So let's move forward. For my more PY, highlight the inherent problem in the double coincidence of wants. As we have understood that the inherent problem means, inheritance means the thing belongs to me. The thing that we are purchasing or the thing we are selling belongs to me means the inherent. So the inherent problem, the double coincidence of wants, is both the parties have to agree. But if we have seen late in the ongoing class that there were three pictures and both the three were not agreed to buy or to sell each other's commodities. So that was the inherent problem in the double coincidence of wants. So here you can change your answer according to the question. I'm just giving you an overview that what you have to write and how you have to write. You can change your answer as you wish. So the second question comes that how does the money use of money makes it easier to exchange the things? Give an example. So we have understood it in the ongoing class, so we should move forward. I think you will read all these PYQs and these are the important ones only. So to save your time, I have given the all important PYQs in this session only. You can get the PDF of these slides in the description box. And if you need anything else, you can comment down. So let's move forward, that how the evolution of money has been done in our day-to-day lives. So we can see here that in the ancient times, the barter system was done, and then the gold and metallic coins come. The gold and metallic coins are the times when the kings and queens were there. Then the introduction of paper notes, plastic cards, electronic money, cryptocurrency is ongoing and it is in vogue nowadays. It is the time of modern times. Let's move forward. Modern forms of currency. So the modern forms of currency is what? Paper notes we use, the coins we use. So these are the modern forms of currency. Then the modern forms of money. Modern forms of money are deposits plus checks. Deposits plus check. Why I have written like this? Because if we are depositing something, so to withdraw it we have to give the checks. So deposit and checks come hand to hand. So if you are confusing between the modern forms of currency and modern forms of money, so they are two different things. That modern forms of currency is what? Paper notes and coins, and the other one is what? Modern form of money, that is deposits plus check, that is related to bank. We will understand in deep in the later class. So let's move forward. So if you are saying that the paper notes are just a paper, so why it is accepted as a medium of exchange? So it is accepted as a medium of exchange because it is authorized by the government of our country, by the central government. So on the behalf of the central government, the Reserve Bank of India issues the currency note. So it is also authorized by the government of country, and the government is at the head of the country. That is why we are accepting the money as a medium of exchange. So there is nothing to explain too much. So let's go on. So here another important topic comes, that deposit with banks. What is deposit with banks? What are demand deposits? We'll discuss. So now the other form in which people hold money is called deposits with bank. So how the people deposit? They deposit by opening a bank account in their name. So when they want, they can withdraw it. So these demands are also called as demand deposit. So these deposits in the bank accounts can be withdrawn on demand. When the depositors demand that they want this money, they can withdraw it. So these deposits are called demand deposits. So we'll discuss deep into it now. So now what are the benefits of demand deposits? So people have the provision to withdraw the money as and when they require. This is the first and the beneficiary benefit of the demand deposit, as when we want we can withdraw and when we want we can deposit. So our preference is here that the benefit is only to us and the profit is only to us, that when we want we can withdraw and when we want we can deposit. So now the people's money is also safe with the banks, as bank take the responsibility to safeguard our money. So our money is also safe with the banks as it is of the government only. And the best benefit that we get from the bank by depositing into the bank our money is what? Interest rate. When we deposit the money, when we withdraw that money only, we get some interest with it. So it earns certain amount of as interest in the deposits. So the most important benefit is what? We get interest. We get some extra money when we deposit and when we withdraw. So now the another interesting facility which is so beneficial for us, that is what? Check with the demand deposit. As we have to withdraw when we want, so there is something, means there should be a medium from which we can withdraw the things and we can give the things so that we can withdraw the money. So that is what called check. The check is a function that a bank provides to us. A check is a paper. It's just a paper, but so important. It is a paper instructing the bank that to pay a specific amount. The payment that we want is called the specific amount. Here in the picture you can see the specific amount is written like 57,000 only, in numbers also and in the written form also. So the specific amount from person's account, the account number is mentioned in the check. So here we can see only the account number is also mentioned here. The payee, that is Prem Kumar, and the rupees in words it is written that 57,000 only. The branch code name is written of the bank, the check number is written, the coding used by the bank is written, and the most important, that is sign of the payer, is also done here. Now the date is also mentioned. So the check is the most important thing when we withdraw the deposit from our bank. The check act as the most important thing when we withdraw our deposits. So here is the perfect definition for check, that is written here on the slide in the yellow check box. That is what? A check is a paper instructing the bank to pay a specific amount from the person's account to person in whose the name check has been issued. So it is the perfect definition. You can just read it and you can just remind it and you can just write this same definition in your paper also if it comes that what is a check. And it is an important question that the CBSE asked, that what is a check. I am giving you here only. So you just write it down. I'm just explaining you the things in very simpler way so that you can understand easily. And if you are finding out it difficult, so please comment me down for any changes you want and anything you want. Please comment it below.
Let's solve some PYQs on this topic.
That describe the utility of check. This is a very important question that the CBSE has asked in the 2017 paper, that describe the utility of check. So utility of check means what does the check do, is what describe the utility of check. So the check is a paper that instructs the bank to pay a specific amount from the account holder's account to the person in which whose the check has been issued. The same definition that we have studied earlier is just written here. So you can see that the same answer you can write it down in your paper when they ask. But if you want, you can change as you want. It is only up to you. If you want to write this the same answer, you can write it down.
So that's it for today. We will meet again and we will discuss the loan activities of bank in the part 2 of this session.
So let's meet again. Thank you so much.